So if I can put stones in the path of India's financial security, that will be the biggest achievement. As Makran Dave mentioned, गमतू मलिए तो गुंजे ना भरिए, गमता नो करिए गुलाल. If I can light one candle which can dispel financial darkness in a small corner of India, that is life well lived.
Hello and welcome everyone. I am Vishal Khandelwal and this is the 1% Show. This show is an open ended exploration into the minds of the wisest people around to help us learn to think, invest, and live each day a little as 1% better. You can learn more at safalniveshak.com. My guest today is Nilesh Shah, who is the managing director of Kotak Mahindra Asset Management Company. Nilesh has over 31 years of experience in capital markets and has managed funds across equity, fixed income, and real estate for Indian and global investors. In his previous assignments, Nilesh has held leadership roles with Axis Capital, ICICI AMC, Franklin Templeton AMC, and ICICI Securities. He is also a gold medalist, chartered accountant, and a merit ranking cost accountant. While this is my first interaction with Nilesh, I have looked up to him for the last 20 years, ever since I took my first steps in the investment industry way back in 2003. In fact, those were the times when most of us youngsters in the investment industry looked up to just two money managers. One was Prashant and the other was, of course, Nilesh. And even while I have known him from far, I can vouch for this description of him carried by the Economic Times a few years back, where they wrote, and I quote, "It's easy to miss Nilesh in a room full of flashy name dropping bankers and money managers in pinstripes and expensive watches. With his calm exterior, thin voice, careful choice of words, and sober checked shirts, Nilesh may be at a quiet corner sipping orange juice, as he makes a point on the role institutional shareholders should play in a company. He is one of the very few asset managers who believe that fund management is more about common sense than fancy degrees or qualifications. Verse 48 from chapter 2 of the Bhagavad Gita reads, Yogastha Kuru Karmani Sangam Tyaktava Dhananjaya Siddhya Asiddhyo Samo Bhutva Samatvam Yoga Uchyate. Through this verse, Bhagwan Krishna is asking Arjun to be steadfast in his performance of his duty, abandoning attachment to success and failure. Such equanimity, he says, is called yoga. Without any exaggeration, I must say that I have seen Nilesh, his speech and conduct over the years, despite the noise and cycles of the markets, as a great example of such equanimity and yoga. And this makes me even happier to talk to him today. With this and no further delay, Nilesh, welcome to the 1% Show. And thank you so much for agreeing to do this.
Thank you, Vishal, and thank you for those kind words of introduction.
You're welcome, Nilesh. You deserve them. Thank you so much. So, Nilesh, I want to start this conversation not with your background. That's my second question, but with a passage from Mahabharata, which I think you've quoted in the past as well. This is about the Yaksh Prashan. So, the eldest of the Pandavas, just to give a backdrop to readers who may not know of the story. So, the eldest of the Pandavas, who is Yudhishthir, comes upon a lake and finds that his brothers lay dead on its banks. He's thirsty, so before beginning to search for the murderer, he reaches into the lake to drink, not knowing that it was water from the lake that brought his brother's end. At that moment, a Yaksh, the spirit presiding over the lake, appears. He warns Yudhishthir not to drink lest he suffers the fate of his brothers, but he also offers an alternative. Yudhishthir can instead answer Yaksha's 18 questions. One of the questions is, what is the greatest wonder? And Yudhishthir replies, each day death strikes, but we live as though we were immortal. This is the greatest wonder. So, my first question to you, Nilesh, is when it comes to how you've experienced investing in markets over the last 3 decades, what is the greatest wonder that you see here?
I think, Vishal, by in the past, the greatest wonder to me was how come people are not bullish on India as I am. Uh, while on the face of it, we always presented India bull, but when people were doubting us, you had to introspect. And fortunately, every time after introspection, I found the answer that no, others are wrong and India growth story will do well. I still remember when a legendary investor like Jim Rogers went negative on India, I gathered all the courage to dispute him. And I also apologized, saying that, you are such elderly and respected person. But I beg to differ my view. Today, that astonishment has converted on the other side. It's now no longer needed to convince people on India growth story. We go to every nook and corner of India and we find people more optimistic about India. Many a times I have now found caution that Nilesh bhai bullish ho jao, itne bearish mat raho. And like I wonder how times have changed. At one point of time, we were trying to convince others on India growth story, and on rare moments, we ourselves were in self doubt and doing introspection. Today, despite our bullishness, people find that we are not sufficiently bullish. This is the biggest astonishment where common men of India has started believing in India growth story.
Right. And do you also, since you're talking to a lot of investors, both experience and retail as well, do you often see people negating risk these days from the idea that risk is losing any money permanently, as Warren Buffett defines risk, right? So, are we seeing that in the market currently, that people probably are forgetting, or especially the younger generations forgetting, that they can also lose money rather than be so overly bullish on a country like India, which is there to
Un-
see. But yes.
Undoubtedly, Vishal bhai, I have seen Indians finding ways to lose money. On an average, Indians are great savers, but on an average, Indians are also very poor investors. 18 crore investors found ways to trade in cryptos and lose money. About 10, 11 crore Indians played gaming from rummy, poker to whatever and probably lost money. Ponzi schemes from Pearl Agrotech to City Limousine, people have lost money in the hope that they'll make quick return. In FNO trading, I have seen people losing money. I have seen houses getting broken up because wife or kid or husband ended up leveraging and speculating. Across the board, I am seeing that Indians do become greedy in order to make quick money, and in the process actually end up losing money. In a state like Kerala, which is most educated, the total equity mutual fund AUM is less after decades of investment to what they spend on buying lottery tickets. Now, in lottery ticket, no one can make money but the state. Otherwise, they will not run lottery. And yet, poor people keep on buying lotteries with the hope that eventually they'll make money. So, we have two Indias, one where people save and invest wisely, and there is also another India coexisting where people save enough but don't invest wisely.
And I think it was John Templeton who said that this time is different. The four most dangerous words in investing. Right. So I am not sure. Right. See so many people now forgetting the wisdom contained in these words and thinking that this time is actually different, which is never the case.
Absolutely. Momentum takes over and making money becomes so easy in like last 3 4 months, where everyone believes that they have learned the art of making money. Many people end up leaving their jobs to become full-time trader, to realize later on that that's probably the worst decision they can make in life. So clearly, it's important for people to get right financial knowledge, to gain right financial awareness, and become investor rather than trader, become investor rather than speculator, become part of India growth story rather than herd mentality to become overnight rich.
That's a great advice, Nilesh Bhai. And especially, I think the young audience of this podcast should do well to remember what Nilesh Bhai just said in terms of trying to survive the stock markets rather than trying to play the game as if it's a casino and you are only going to win. Though we realize that in reality, in the casino, the longer you play, the more you're going to lose money. So I think that's a great advice. Thank you so much, Nilesh Bhai, for that. Uh, Coming back to the introduction, right? So just to just to give the audience a bit of background from your about yourself, though I briefly introduce yourself, right? So where did you grow up and how were your earlier years like before you got into work? Also, like Steve Jobs talked about the idea of connecting the dots in the past. When you look back at your past and growing up years, which are those most important dots you can connect that brought you to what you are today?
So I grew up in Kalba Devi Road, Charles System. If you had watched a movie called Katha, where Nasruddin Shah, Farooq Sheikh, and Dipti Naval played a role in Sai Paranjpe movie, uh, my chawl system was like Katha. Each one was there for everyone. I studied in Gujarati medium school, and I lost my father at very young age. For me, education was my redemption, and I was really lucky to have a very kind principal who gave me scholarships and ensured that I completed my study. I came to Sydenham College, joined Bachelor of Commerce, and side by side, I started working with a chartered accountancy firm. Eventually, I pursued my CA course. By luck, I topped the course and was about to join one manufacturing company. And I'm so thankful to the advice which I got from that manufacturing company's uh, general manager, that go and try your luck in financial services. That's where future is. This manufacturing job will make your life very comfortable. Uh, at this age, take risk. I hid his advice and landed up in ICICI. I was a gold medalist chartered accountant coming into job, and the first experience which I got was humbling. All my colleagues were far more smarter than me, and they were far more humble than me. So the first dot I picked up was to be humble, because if you are arrogant, you don't have long shelf life. From ICICI, I was managing IPOs in merchant banking division. In a year, I realized that this is not my cup of tea. You have to get mandates by promising moon to the issuer, and you are not taking care of investor. This cannot last long. I had opportunity to move to foreign exchange market, went for few months to JP Morgan Singapore to be part of their FX desk, learned that, and I realized that, you know, despite your lack of knowledge, the sheer uh, ingenuineness can give you better return. In JP Morgan, we were more of a price taker, and I became market maker. From being price taker to market maker, volumes went up, but the profitability also went up. Later on, returned back to India. The FX license was in ICICI. That's where I moved into debt market in ICICI Securities. When I joined debt market, majority of players were either in jail or retired post 1992 scam, and we were all sucked up because there was vacuum at the top. uh, Played a role in debt market in those days, learned how to manage interest rate, credit risk, and eventually got an opportunity to work in Franklin Templeton. This is where we learned $1 cost averaging or systematic investment plan, and second, client first. I was a very successful fixed income fund manager From 97 to '03, I would have delivered return which was better than most equity funds. Templeton became second largest asset management company in India, just behind UTI. Imagine a foreign brand coming and becoming second largest. Money was pouring into our fixed income fund, but by then interest rates had bottomed out. I went to my boss and said, we need to now return money to investors because I don't think so we'll be able to provide return going forward. He heard me out and said, fair enough, that's the communication we can do. I returned about 90% plus of my corpus to investors, and I refused money coming into my duration funds. And mind you, I was not the only fund manager doing it. Entire fixed income fund manager community did this. We returned money to investors. We stopped taking money to investors when we realized that the expected returns won't be delivered in fixed income funds. Client first is something which Templeton taught me, and I carried it forward. From debt market, when I realized that the good times are over, I needed to move into equity. Templeton had a fantastic equity management team, and hence I had to go out. My old organization, ICICI, was willing to give me a chance, and I moved into managing both debt and equity. ICICI was a fantastic organization, and we really came together to become the largest mutual fund in the country. This was the first time a private sector financial services organization overtook a government undertaking to become the largest player. In insurance, even today, largest player is LIC. In banking, the largest player remains State Bank of India. In general insurance, GIC remains by far the largest. It's only in mutual fund where a private sector player becoming bigger than government undertaking. It's a matter of pride that State Bank of India Mutual Fund has regained that title. But at least for a while, we became the number one asset management company. From ICICI, I moved to Axis Capital when my previous bosses called me, realized that investment banking is not my cup of tea. And thankfully, I got an opportunity with Kotak Mutual Fund. I think over last 3 decades, one thing which I realized, one, you have to be humble. If you are arrogant, your shelf life crashes very quickly. Second, client first. Whether you made money for client or not, but whether you compromise their interest knowingly, that's going to get a differentiator. Your long-term business will be built on client confidence and client trust. Most people think we are manager of money. In reality, we are managing clients' trust and confidence. If I have your pocket share, it can quickly disappear unless until I have your mind share. But if I have your mind share, eventually pocket share will follow. So whatever we do, we are trying to keep client first. These are some of the learnings of my 3 decades in market and mutual funds.
You've traveled a long journey, and the first lesson that you learned about humility, you're still carrying it through. I think that's commendable. So thank you so much for being you. uh, I was going through your Twitter, and your Twitter bio reads that you are a student of market, rightly so. As a student, what have you learned about the world of investing and human behavior that you wish you knew 30 years ago when you were just getting started?
So Vishal, by learning is a continuous process, and I will always say that we are all students of the market. None of us are big enough to be called market gurus. And I learned this to be a student of the market in 2008 crash. Uh, by October 2008, markets had crashed. and some of the distributor wanted to carry mutual fund managers all over the country. They introduced us as market guru in one of the first conference, and I had to stop him in between and say that if I was market guru, I would not have lost 50-60% of investors' money. I am a student of the market, and there are valuable lessons learned from this crash. Hopefully, I'll be able to implement them going forward. That one statement, that I am a student of the market and not market guru, broke the ice with people for whom I had lost 50-60% of money. They appreciated the honesty and humbleness, and that broke the ice. That day, most of the people who had come to attend that client event ended up cutting check for our fund. And that's where I realized that it is important to be humble, to be student of the market rather than guru of the market. As guru, expectations are different. As student, expectations are different.
I'm sure. That's also self fueling. Probably, if you are humble, you end up becoming a student of the market. You are constantly learning, and the more you learn about markets, you realize the market's role as the greatest humiliator out there. So you that itself keeps you humble. So I think it feeds into
Absolutely.
itself well, and that's right. Wonderful. Uh, you spoke at a financial planning conference in 2013 where you shared with the audience the tale of a horse in Emperor Akbar's stable that preferred to eat grass over oats. So the story is like no amount of cajoling would get him to eat the more nutritious meal. And then the trusty Birbal came up and he said that, give me a month and I will ensure the horse eats the oats. So Akbar says, okay. And a month later, the horse is eating oats. How do you do that? Asked Akbar. And each time he ate grass. So Birbal replied that every time the horse ate grass, I hit him on the head. Uh, Now he's learned to eat oats. Now, in your story, the retail Indian investor was the horse who had learned to eat grass, which is real estate and gold that time, because each time he tried to eat oats, which was market linked financial products like equities, he was hit hard on the head, maybe through scams or some frauds, all those kind of stuff. 10 years have passed since then. How has that horse changed for you? You were quoted recently as saying that this is India's time. There is assurance that this journey is likely to not falter. But tell us about your shift in perspective over these years, both on the stable, that is India, and the horse, which is a retail Indian investor.
So, Vishal Bhai, as I mentioned earlier, I think it's difficult to find a person who is not convinced about India growth story. And if I have to sum it up in a very simple manner, the state of Maharashtra where we belong today has same GDP as whole of India of 2005. The state of Uttar Pradesh and Uttarakhand, which were combined in 2001, has same GDP as 2001 India. And Tamil Nadu, Gujarat, and Karnataka are having same GDP which India had in 2000. In about 2 decades, the six states have created what was yesterday's India. If all of us continue to work as hard as last 20 years, over next 20 years, these six states alone will create five times today's India. There are 23 other states which are also working. So in front of our eyes, are we going to see multiple times India? Answer is undoubtedly yes. Of course, we can't take anything for granted. We'll have to work hard like we worked in last 20 years. But we will see multiple times today's India. And that is the growth opportunity. And within that, there is a set of investors which have started learning to eat oats. They do SIP on a regular basis. About 15,800 crore came last month. And my feeling is that this number is only going to go higher. We have also started seeing a very, very matured behavior by retail investors. If we divide since March 20 markets in two parts, the top half and bottom half, in bottom half, by and large, it is SIP plus subscription. And in top half, it is by and large SIP minus redemption. The collective psychology of the market is such that there are buyers at lower levels and sellers at higher levels. This maturity gives me confidence that what we saw with 401k plan in US, we will see similar thing with SIP and NPS in Indian market. Indian horse as well as the stable is now opportune. It's right. Horses have learned how to eat oats, and that diet is going to give fairly long run to the horses.
That's right. Your story of horse and horses, for example, reminds me of this story that Howard Marks has talked about in the past, where there was like a race, a real race, a fictitious race, where there was only one horse which was running the race, and everyone actually bet their money on that horse somehow, right? Uh, Everyone knew for sure that this horse is going to win this race for sure because the only horse in the race, right? Midway during that race, the horse actually skipped the racetrack and moved out. So the horse actually did not complete the race, and nobody won in that case. So there was a rare situation where there was only one horse, but it did not finish the race, so it did not win. So when you talk about the opportunity, which is India, and I think you also at your recent talk at Flame University, you spoke elaborately on the India opportunity, and people I think can go on Flame's website and also see that presentation, which is quite comprehensive. Uh, my question is, what are the long-term risks that you see to the India story, and not short-term, no valuation, nothing, but over a long period of time, what are those hurdles or speed breakers that India can go through?
I think the biggest risk for us is risk of self goal. India had great opportunities in the past, but we scored self goals. In 1947, India was ahead of Japan in per capita GDP. In 60, we were equal to South Korea in per capita GDP. In 80, we were equal to China in per capita GDP. Today, they are all well ahead of us multiple times. They followed certain policies and we followed different policies. For me, the biggest risk remains self goal. As Indians, when our car gets momentum, like it got in the 90s, thanks to the Narsimha Rao Manmohan Singh combination, we left the foot from the pedal rather than accelerating the car. Eventually, the car stalled. 2014 onwards, we have started taking again right decisions, but we should continue doing that. The best way to capture India's self goal is in Singur versus Anand story. India's most respected business house Tata's wanted to set up an automobile plant in Singur, struggled for years and finally moved out. Today, Singur remains an underdeveloped, poor part. They came to Sanand, set up the factory. Nanocar didn't succeed as per expectation, but the factory got its own momentum, and today Safari and Harrier and Tiago gets produced over there. Apart from Tata Motors, there is Maruti Suzuki plant, and one could see Sanand as a developed place. Jobs, growth, development, all visible. I hope and pray that India follows policies which creates more Sanands and not policies which will create Singur. Today, it is a matter of pride that in West Bengal, where Singur is there, they are encouraging industry. They are holding Vibrant Bengal Summit to invite investors. And on ground, uh, doing business in West Bengal has improved substantially. So, my feeling is that this time we will not falter. We have learned from the past, and hopefully, we will not repeat the mistake.
I'm sure the hope is eternal. So thank you, Shah, for sharing your insights over there. Moving on to a bit about your investing process broadly, right, and the lessons that people can draw from that. So there's one statement which I really like from Jeff Bezos of Amazon when he says, and I quote, "Anybody who does not change his mind a lot is dramatically underestimating the complexity of the world we live in." I go back to that statement from time to time and reflect on small and big things I have changed my mind on. Now, two questions here with respect to investing and decision making. One, where and how do you think we should draw a line between being fickle minded or indecisive and being adaptive to new information and perspectives? And number two, What is the most important thing in investing or life you have changed your mind on in the last 5 years?
So, as I mentioned earlier, I was a fixed income fund manager, and I was a reasonably successful fixed income fund manager. In fixed income, most of the time you made money by trading rather than simply investing or buy and hold. When I graduated from fixed income to equity, my mindset was still of trader. I wanted to capture every price movement in the market. I wanted to be a market maker rather than price taker. Obviously, that was possible only on a small set of corpus. And certainly, equity markets were widely different for executing fixed income kind of trading strategy. I realized pretty soon at IPRU that this strategy will not work. I needed to become an investor rather than a trader, like I was managing fixed income portfolio. So that was the first mindset change which I had to do. Second, while working in Templeton, and we were working in Wild West days, insider trading rules were not that strict as it is today. And I always felt that people who have inside information, they are at a competitive advantage to us. And I should become a market khabri because market is infinitely more wiser than an individual. I learned from Templeton that look, even if people have inside information, they may not be able to understand value of it. And even if you don't have inside information, doesn't matter because you can still understand value of a company without inside information. What mattered was your fundamental analysis rather than what management was passing as information. That was the second big change where I realized that you don't have to be market khabri. You don't have to have all the information. You just need to realize value of information which you possess. If you have ability to understand value of the information, even if it is limited, you will still do well in the market with someone who has all the information but doesn't understand value of it. The third thing was again in 2000 learning, where we had lost money in TMT bubble, and one of the investors said that Nilesh bhai, you should make those mistakes which I am not capable of making on my own. There has to be a difference between amateur and professional. That was a big learning. As professional, there were certain obligations on me, and I should not be behaving like an amateur investor, investing based on momentum, investing based on market information, investing without doing appropriate research. I think over the years, many such things came into play, and that slowly pulled you towards what you can say is now your investment process. We are generally growth at reasonable price investors, not pure value focused, not pure growth focused, trying to take a middle ground. Generally, we have avoided companies where we believe there are either doubts on the businesses or on the governance. Uh, in most of the accidents which have happened in the stock market in recent times, by and large, Kotak Mutual Fund have stayed away. A large part of credit should go to my team, but some credit I will take because we set the boundaries in a manner where we could avoid those kind of temptations. One final thing, Vishal bhai, you have to keep an open mind. And being open, having an open mind many a times favors you. As they say, luck favors brave. I think luck favors open mind. And I'll give you an example. There was a newspaper company in which we had made 5 times money compared to our cost. One day, an analyst came and said, there are doubts on the revenue of this company. The first reaction after making so much money, what does that analyst know? Throw him out. He is trying to spoil reputation of our investment. Fortunately, he persisted, and some wise sense prevailed. He gave me 7 days newspaper and showed what was the average advertising space. The revenue claimed by the company divided by that average advertising space meant that that company, the regional newspaper, should have charged more than what Times of India was charging. Obviously, that was not possible. Based on that, we could sense there was some trouble ahead. We could exit our position at profit, and eventually that whole thing blew out. I'm thankful to the analyst who persisted with me to press his research. If I had not opened mine, I would have been stuck with that position and lost money as well as reputation. Having an open mind helped me exit the position with profit. So, one thing in the market is, whenever new information comes, keep an open mind. You don't have all the information. There are many, many smart people outside who do far better work than you, and you should have the courage and humbleness to accept those feedback from them. The networking effect comes into play. Today, many times we have been able to avoid IPOs because you have friends whom you can call and get assessment about the company. uh, they are there in different locations, they have the same passion as you, and that networking also helps you avoid mistakes. So I will say, keep an open mind, build a network of good quality friends. That combination ensures that you avoid most of the mistakes.
You talked about corporate governance, and in a previous episode of this show, when I was talking to Naren of ICICI, he mentioned that in India, corporate governance is also cyclical. Right. So, in your view, when you are researching companies or when you are training your analysts to research companies, right, what are those critical or key three or four items, whether regarding the business or the promoters, the management, right, or the financials, right? What are those three or four key items that really tell you whether this company should be doubted or not doubted?
So most important thing for me is the conduct of the management. Now, when Valya becomes Valmiki, you get Ramayana. But we also have to remember that leopards don't change their spot. So, in your quest of finding next Valmiki, you should not deal with Valya, even though you may end up missing Ramayana once in a while. That conservativeness that leopards won't change spot works well for fund manager. The second thing we are looking at is the conduct of the promoter or management. In a very simple words, if they are appearing more on page 3, that is party, one needs to take them with a lot of pinch of salt. If you see them spending more time in the office, in the factory, then you know that you can trust them. On top of it, obviously, there are financial analytics, related party transaction, the business structure, involvement of family members and compensation, and so on and so forth. The final thing about governance, after doing due diligence of the past behavior, is their current conduct. Many a times I have realized that promoters end up doing things which they had no intention to do. They have very smart CFOs and advisors, and they present only one side of the picture for them to take certain decisions. If you present them the second side, then many a times they end up avoiding taking wrong decisions. We believe it is important to engage with promoter and show them that Respecting minority shareholders will end up actually increasing your wealth. It will end up increasing your valuation, and you will be able to raise capital even during bad times. By and large, thanks to SEBI regulations, which has empowered fund managers, and also realization at the promoter level, the governance standards have started improving. Now it's a journey. We'll have to continue to travel on the path, but I'll be honest in saying that the governance standards by and large in India has improved substantially over the wild west of the 90s.
That's heartening to know, Nilesh Bhai. So there's this beautiful interview of Anthony Deedon, the chairman of Edelweiss Holdings, not the Indian Edelweiss, but outside. It's a Bermuda-based investing holding company, which is one of the best investment interviews I've ever watched. In that interview, Tony's introduction about himself and his work provides some remarkable insights around his work and ethics. At one time, he says, and I quote, when you are an investment counselor to a family, you come to the inevitable observation that this is all the wealth this family possesses, and no one is ever going to give them any more. And there is a sense of irreplaceability to this capital. So you have to start respecting it. Respect the fact that it is really irreplaceable. It represents a lifetime's worth of saving. That is, that you must avoid the kind of error that would put this family out of business. You also learn fairly early on something that takes men far longer to do, that it is easier to actually make money than to keep it. Now you are one of the those rare money managers I know of who shares a similar amount of respect for their clients' money. So as per you, what are those core things that a money manager must ensure that leads them to truly act as a fiduciary to their clients' money, and how can an investor assess that while searching for a money manager? In short, if you were not a money manager, how would you find a good money manager?
So, when I had an arranged marriage and my wife was a professor in college, in those days I saw her getting lot of respect. We'll stand in a cinema hall and some student will come and give the tickets. We'll be standing at a restaurant and someone will say that, ma'am, you can take my place. We'll be standing at the bus stop and someone will stop the car to ask where you want to get dropped. I saw how a professor was getting respect. And in 2000, Vishal Bhai, I don't know whether you'll remember or not, but many fund managers' posters were put up in many public places in Mumbai for losing their money. So that was the mindset. I could see the respect which a person gets. There was an inherent desire in myself that one day I should also be respected like this. Probably that pushed me, along with Templeton's value of client first, to return money and bring down your own funds by 90%. Probably that gave the courage to speak truth about markets, that look, we don't know what's going to happen in the near term, but if you invest with us over a period of time, we'll make money. 90% of my clients probably, you know, invest on their own, but 10% of clients are probably investing on our name, our reputation. हमारे में एक कहावत है कि पैसा तो जरूरी है बट दुआ है उससे भी जरूरी है. I am so lucky that I have got a job where I'm paid well, I earn well, and if I do my job well, I will get blessings from my client. दुनिया में कौन से जेब में दुआ और पैसा दोनों इस तरह मिलते हैं. So as a money manager, my attempt is to get blessings of my client. And how do I achieve that? Is outcome in my hand? Answer is no. Intent and effort, those are in my hand. I try to lead my team on intent side, that we want to make money for our clientele, and then we put in effort. I try to lead by example, hoping that our intent and effort will get converted into good outcomes for our client. And the best part in this journey, clients appreciate your intent and effort. And even when outcomes are not so good, they forgive you, They give you time so that outcomes can become positive. So to me, the best money manager is a person on whose intent and effort I can have the confidence. Today, we are so lucky that in the Indian mutual fund industry, bearing few exceptions, there are legends whose intent and effort is beyond doubt. These are the people who have laid foundation of Indian mutual fund industry, and they have kind of set culture in their organization. I think now it's a self-fulfilling things. People like Prashant Jain, Naren, Harsha Upadhyay, Mahesh Patil, they all have created culture of intent and effort, and that's now flowing through their organizations.
In a world of outcome dependence, right? So where a lot of people look at outcomes and it's decide what is good or what is bad. I think it's a great lesson that you've shared about focusing rather on the process, the intent, and the effort that the money manager puts in to manage your money. So I think that's a thankless job, and I thank you on behalf of investors for doing that so well. Now, the demands of being a public money manager and now also leading a money management firm are much higher, I'm sure, than the demands of being an individual investor, especially because you oversee such large sums of other people's money and must act as a fiduciary. You need to deal with information overload and markets irrationality. Each of your decision and outcome is publicized, and also because money management itself has become such a competitive field. I'm sure all that exerts a fair degree of pressure on you. So, how do you keep yourself balanced and sane amidst these and other challenges while continuing to enjoy what you're doing? Basically, what is your support system?
So Vishal bhai, I like what I do. When I started my fund management career, Templeton India Income Fund had 35 crore AUM. Today it has grown to more than 3,50,000 crore. But we have grown with this system. We have never felt that burden on our shoulder. Second, when I joined Kotak Mutual Fund, Mr. Uday Kotak gave a brilliant advice. Nilesh, there are four quotients in life. The first quotient is Ram, where your objectives and means to achieve those objectives both are righteous. The second quotient is Krishna quotient, where your objective is righteous, but sometimes the means to achieve that objective is not so righteous. Always try to be in Ram quotient, and once in a while, because it is Kalyug, you can come to Krishna quotient. Then the third quotient is Duryodhana quotient, where objectives are not righteous, but the means to achieve that objective is always righteous. So you focus on mean rather than the goal. Never go there. And finally, there is Ravan quotient where means and goals both are dubious. Never go there. Now, when you're working in an organization where mandate given is to be in Ram quotient and occasionally is Krishna quotient, half the job is done. We pass the same culture to down below team. This takes away the pressure. And over 30 years, I have seen that it's not the outcome which matters to the investors. They are smart enough to understand your intent and effort. And as long as that is in right place, they are happy to give you time so that outcomes can change. I have a fund called Kotak Global Innovation Fund. We launched it 3 years back. Today it is 16% below its face value. Yes, it does cause pain to the investors, but people are willing to listen why that fund is quoting at a discount. And many a times when some investor complain, there are other people defending, saying that look, once in a while fund may not run, but look at all other funds of Nilesh Bhai that is delivered return. I think that goodwill, that blessings which we have got from customers, which we have got from investors, that is our biggest punji. That is our biggest achievement. And we do everything to protect that by staying in Ram quotient and occasionally in Krishna quotient and always avoiding Duryodhana and Ravan quotient.
I think that's a great analogy. By being in the Ram quotient all these years, almost 2 to 3 decades now, you've also compounded your goodwill, and that is the sort of helping you now, where your investors are defending your funds. right? Even when they're down, and they understand why is it down, so they understand the process and not just focus on the outcome. So that's a great thing. You've led multiple organizations over the past few years, few decades, uh, in which you must have been through hundreds of hiring interviews over the years. So what is the number one aspect that is not on a resume that you look for as a trait in all your employees when you bring them onto your team?
So in the past, I used to rely upon reference, as I thought I don't have ability to read a person. So let me take a shortcut and try to get reference from people whom I can trust and who have observed those people over a period of time. This was working well when my recruitment span was smaller. Unfortunately, now the recruitment span is becoming bigger and bigger. While you still try to get reference, you have no option but to judge a person. What I look forward to the person is what is his dream, and will that dream get achieved by joining my organization? If a person's dream is not in alignment with our culture, for example, if I have to recruit a fund manager and he wants to be the top performing fund manager, then our cultures are not aligned. Because to be the top performing fund manager, you'll have to take huge risks. Sometimes those risks will work, sometimes it won't. And when that doesn't work, you will be not at the top but at the bottom. What I need is a fund manager who is willing to be a tortoise of the race, let the rabbits run away and make mistake and go to sleep, and will continue to walk slowly and eventually reach our destination. By making less errors, I will still be ahead of others. By taking less risk, I will still be ahead of others. So if my person's dream is in alignment with my values, my culture, my organization's value and culture, that's the perfect fit. Many years ago in Templeton, I had learned that you don't try to put a round person in a square hole, it will never fit. There's nothing wrong with the round person, it's just that the organization needs a square person. So I try to recruit people who can fit into our organization, our culture, our values, and that creates a winning team. The team makes 1 plus 1 11 rather than 2.
Talking about the world that we are living in, which is awash with noise and information, and you are amidst, you are like right in between of that noise and too much information. What is your process of separating signal from noise in this world? And what about independent thinking, which is so much required in the field of decision making and investing? How did you develop that mindset amidst all the noise and information around?
So, one, over the years, you have learned certain tricks of the trade to separate noise from the news. I will say it is blessings of God that with experience you have developed that ability. Can that be copied and implanted into others? I guess each one will have to walk on that path to figure out how to differentiate news between noise. The second one is more institutionalized in nature. When you, let's say, reduce portfolio turnover ratio, automatically culture gets created of differentiating between news and noise. So we are trying to put in place institutional mechanism in terms of longer term investment call, lower portfolio turnover, ignoring short term developments to play long term thesis, which allows our team to move away from noise and focus on the news. Does it always work? Answer is no. But then when you know, get on the wrong side of interpretation, if there is a team, by and large, they'll be able to rescue you. So it's a team effort of common values, common process, and then there are institutional mechanisms like longer term research cycle, lower portfolio turnover, which slowly and steadily creates the culture of focusing on news rather than the noise. Now, there are other ways of achieving it which we are not following. For example, there are many organizations where they don't watch TV channel. Uh, they just keep TV shut during the market hours and post that. I haven't reached that level, but yes, we try to build institutional mechanism so that our fund managers and analysts think long term rather than react to the news.
So basically, on an individual level, if someone were to create a process or investment philosophy for themselves and or a checklist for themselves and stay within the boundaries of that process, I think that should also help that person in terms of separating
Absolutely.
this noise from signal. Right? Greater. Taking a bit of a detour and talking about spirituality, because you've talked a lot about spirituality in the past and you've connected them well with the ideas in investing and finance. What does spirituality mean to you? And how does it play a role in the life of a modern day thinker, decision maker, and an investor?
So विशाल भाई एकदम सिंपल है, कर भला तो हो भला. My life is full of pleasant accidents, and everywhere when I have tried to do something good, multiple times that have returned to me, whether it's in the form of friends, whether it's in the form of where your work gets done. I have started believing in kar bhala to ho bhala. There is a very famous Gujarati poem by Makran Dave. गमतू मलिए तो गुंजे ना भरिए, गमता नो करिए गुलाल. If you get something, you don't put into your pocket. You actually spread happiness. You spread color. I think that is what has guided me. If I quit my job and start managing my money, I'll probably make more money for myself at a lesser time. But then I will not get the blessings of my investors. I will not get the opportunity to touch base so many people and lead them on the path of financial security. किसी की तकदीर से ज्यादा और समय से पहले तो मैं क्या दे पाऊंगा, but at least I should be working in leading towards that path of financial security. एक रामायण में प्रसंग है कि जब वो समुद्र सेतु बन रहा था, तो squirrels came with small stones and started putting onto the bridge, and the वानर्स and bears complained to भगवान राम कि ये squirrels हमारे पाँव के बीच में आ जाएंगे. And Bhagwan Ram appreciated the work done by squirrels by putting his hand on the squirrels, and that's why they have five stripes. All of us are squirrels in building financial security for India. हमसे जितना भी छोटा स्टोन कैरी कर सकते हैं, कोशिश करते हैं डालने के लिए. भगवान ने हमें कुछ ऐसी स्किल दी है so that we can manage the market better than an average person. There are many people who don't need your skill, they are masters at this game, but there are many people which needs your skill. So use your skill for the betterment of society. Behave like that squirrel who carries small stones but tries to help build the bridge.
So, Indian spirituality, as little as I've read, it also emphasizes mindfulness, patience, and detachment from outcomes. Being both a student of spirituality and investing, how do you think these principles align with successful long term investing strategy? And if you can give examples maybe of patience and detachment from outcomes that have really helped you in your role as a money manager, maybe some examples can also help you.
So again, Vishal bhai, this is a journey. Was I as matured a person in 97 when I started managing funds? Answer is no. Over the period, you accumulated wisdom to get detached from your positions. I'm also lucky to have friends whom I can reach out in my hours of need and get their detached view. There are few people in market with whom you can talk to get a sense whether this is the top of the market or this is the bottom of the market. No one knows what is the exact top or bottom, but you can get the sense that now market is bottoming out, the fears have overtaken greed, or now the market is topping out and greed has overtaken fear. Having that detachment with position obviously has come over a period of time but is very very critical to make money. In 2000 crisis, I don't think so. Fund managers gave a very good account of themselves, bearing few exceptions like Dr. Mark Mobius, Prashant Jain. But 2008, if you see, most of us gave a brilliant example. We were requesting people to buy all throughout the downturn. None of us created cash balance at the bottom of the market. We were fully invested. And we also advised investors to be fully invested. How did that transition came? I think that transition came partly because of networking effect, partly because of our ability to understand market. And as Mr. Kotak mentioned, the lesser you read Financial Times and more you read Economic Times, you realize that problem was outside, not in India. Knowledge gives you the power to detach. Knowledge gives you the power to overcome those sentimental humps. And partly that knowledge is your own discovery, partly it is the networking effect. I think each fund manager should have few thought leaders whom they can go back to and discuss their viewpoint at the time of vulnerability. You may have to make those phone calls once in a blue moon, but you should have that connection so that your thought process can be validated. It will give you confidence to go against the market.
Many successful investors I've talked to, they practice meditation for mental clarity and focus. Have you also found meditation or mindfulness practices helpful in your decision making process? And if so, how? Or is your work your meditation?
So, to a great extent, for me, I enjoy my work, and I've never felt burdened with my work, even during periods like March 2020, where not only from a profession point of view, but personal point of view, also you were vulnerable. But we just got convinced that this is the time to reach out to our investors, and this is not the time to be fearful and abandon them. As an individual, yes, meditation is very, very critical. Vishal, by most of us are unfortunately in a space where our mind works 24 by 7. It's extremely critical that we give rest to our mind. We keep on doing permutations and combinations in our mind. We keep on processing news and information. It's important that we give rest to our mind, and meditation is the best way. I follow Sambhavi Kriya of Isha. It's 21-minute meditation, guided meditation, sometimes on your own. But it gives you time with yourself. It rests your mind, it detaches your mind from day to day stuff. And that blissful 21 minutes prepares you for future. Many a times people have said that Nilesh bhai, you present things in a totally different manner. You uncomplicate complex economic matters. You correlate Bollywood, cricket, mythology to investments. How does this come to you? I'll simply say that those thoughts come to me on their own. It's not that I make a conscious effort to connect it, but if your mind is quiet, if your mind is blissful, somewhere, that lightning occurs. So it is extremely critical for everyone to spend some times with themselves. Now, whether you do it by way of meditation, whether you do it by way of jogging, whether you do it by listening music, whichever way, please try to relax your mind, which is working 24 by 7. Those half an hour, 1 hour will make a big, big difference.
I think that's such a great advice of slowing down in the world which is moving so fast, and slowing down for the purpose of giving yourself time and your mind some rest so that you can ultimately come out more refreshed and think better. So I think that's a great advice. Continuing up with scriptures, right? And I have some interest over there. You've quoted many teachings from Indian scriptures in your past interviews, but are there any two or three specific teachings or verses from these scriptures that you find particularly insightful or applicable to the world of investing?
So one of my favorite couplet is what Duryodhana told Bhagwan Krishna ahead of the war. Janami dharmam नच में प्रवृत्ति, जानामि अधर्मम, नच में निवृत्ति. All of us have Duryodhan in ourselves. We know what is right thing to do, but we are unable to do it because of our Duryodhan. And even in Mahabharat, Krishna Bhagwan could not guide Duryodhan to the right path. In Kali Yuga, we have no option. Krishna Bhagwan is not going to come to guide us. We'll have to be aware of Duryodhan among us, and we'll have to control it. We all know eating junk food is bad. How do I control my Duryodhan so that I don't end up overeating junk food? We all know trading is inferior way to make money, very, very hard way to make money. How do I control my greed of becoming trader? We all know long-term investment is good, quality investment is good. How do I control my fear of not generating enough return while investing on a longer term basis and wait patiently for returns to come? So, controlling your Duryodhan without the help of Krishna is the biggest achievement in Kali Yuga.
I'm sure that does help. Uh, we all creatures of habit. So, in the last 5 years, what new belief or a new behavior or a new habit that has most improved your life? It can be an old habit or a new habit, but something which has really helped you improve your life in the last few years. Which one would that be?
So, as the hairline has started receding, I have realized that instead of being square table, if I have round edge, that will be better. Uh, Vishal bhai, we are all very successful people. Our opinion matters, and that gives you sense of false pride. You start discounting other people's contribution. Their error you pounce upon. Their omissions you highlight it far more. And those square edges actually hurt people. You are as good as your team. So, how do I develop my square edges into round? It doesn't hurt people. It's a journey which I have embarked upon. I think I have mellowed down far more. I'm able to deal with people in a far more matured manner than what was 5 years back. And if I can continue to improve myself every day, I think that will be indeed truly satisfactory.
That's a great advice for everyone, especially for people who are just starting afresh or new guys or new people or young people, right? So, mellowing down over a period of time, either life can make it or you can start doing that once you get the lessons
Absolutely.
from
Learn
others,
from
right?
my experience. Instead of
Yeah.
square edge, try to be a round person.
And it never it goes wrong to be kinder to others, I think, and you've been very kind to the investing community and now to me as well in giving so much time to share your ideas. So uh, thanks for that lesson, Nilesh bhai. uh, a bit on the advice to youngsters. So we are living in a world where the pace of change is multiplying, even as our formal education system seems insufficient to teach all that is required to thrive. So, what advice would you offer to students and young adults in self-educating themselves? And what are some of the key work and life skills they must learn and hone to do well over the next few decades?
So there are many things in what one can do. But I think the most important thing is to keep an open mind about learning. What we have learned in school and colleges, a lot of things have changed. If I don't keep pace with that, I will not be successful, I will not be relevant. So please focus on learning. Today, fortunately, there is an ocean available thanks to connectivity and technology. You will be able to learn whatever you want to learn. The second thing is being humble. Kar bhala to ho bhala is truly the most important thing. As long as you are thinking good about others, your good will happen. Third is networking. Many research have shown that luck is not divinity, luck is networking. Despite your quest for learning, you are never going to master everything. You will need those support systems, those guidance, which can help you at the time of your vulnerability. To me, a lot of my success is attributable to the advice I have got from people when I was down. They help me take corrective action, they help me validate my views, and it allowed me to hold on to my positions. Having a network of people who can support you, especially when you are vulnerable, is truly important. And networking is all about contributing as well as receiving. It's not just one way receiving. So, three things: learn, learn, and learn, be humble, and third, build a network which can where you contribute as well as receive.
That idea of Karbala to Hobala, I think that's one of the best takeaways among all the takeaways that I have today. It also ties well with the idea of karma, I think, which you also talked about in a recent interview. And as they say, karma is a restaurant where there's no fixed menu, you get what you deserve, right? So be deserving, and I
Absolutely.
think that's such a nice idea to live your life with. Uh, Now, if you were teaching a class of, say, three hardworking students and curious students who wanted to be investors, and you knew that at the end of a year long course, you had to hire all three of them to be on your team, what are those two or three most important non negotiable ideas or lessons you will teach them about investing?
So, one is trying to figure out what market knows about a position or a firm, and what is discounted by the market versus what is our expectation. Many people know how to build a model about expectations of future, but they ignore what market is already discounted or what market is already known. We are we will become successful investor only if we can predict what the company is going to deliver over and above the market expectations. If their delivery is below market expectation, it may look impressive, but it's not going to result into making money. So learn what market is discounted and try to forecast a future. And if you believe company will do better than what is discounted by the market, it is a buy. Otherwise, it is a sell. Second thing is, apart from numbers, there is culture of the organization. As they say, culture eats strategy every day. When you are investing with someone, you know that future will continue to change, but culture will remain constant and help navigate the uncertain future. How do you get sense of the culture of a company? There are multiple ways, but there's no substitute to touch and feel at various level of the corporate. So I'll recommend all three of them to visit as many companies as possible and go through their ecosystem from employees to vendors to suppliers to dealers to figure out what is the culture of the organization. Finally, I will also focus upon, let's say, mandate of my fund. I may have great idea which is fit for a small cap, but I can't put that stock in my large cap fund. I may have a very good idea on an illiquid stock, but I can't buy which will compromise my fund's liquidity requirement. So it's all about building an optimum portfolio rather than the ideal portfolio. The portfolio is not collection of your best ideas. It is collection of your optimum ideas which manages risk on one side, liquidity on other side, and return on third side. So operate within the boundaries of your organization, focus upon the culture of the company, and try to figure out what is not discounted by the market, because that's going to give you edge in terms of outperformance over market.
If I'm right, you have two daughters. What are the most important life and money skills you have tried to imbibe in them? And what has surprised you the most in being a parent that you never thought before you became one?
I think I'm blessed that I have two daughters. There was some medical research which said that when a person is stressed, they are blessed with daughters. So I'm really thankful to the God. What I have told them, and both of my daughters are not into finance field. One is pursuing medical professional, other is pursuing creativity and literature. Both of them are not into finance. I have tried my best to make them aware about good investments and long term investing. I don't know how successful I will be. Time will tell. But, you know, I was disappointed when they didn't pursue the financial field. And one day it reckoned to me that I want my daughters to be happy. I don't want them to do what I expect them to do. That's not their happiness. And that realization gave me a lot of courage to encourage them to do what they like to do. I will really wish my daughter can become the best author. My daughter can become the best doctor. And like I'm taking care of financial health of people, she will take physical health of, she'll take care of physical and mental health of people. So they they should do what they like and they be the best in their field. That's what as a parent I can expect.
And what has surprised you in your role as a parent that you never thought before becoming one? For example, for me, it was like parenting is easy. It was a huge surprise in waiting. So, anything that surprised you most?
So I think daughters have far more maturity than uh, sons. I don't have son, and I'm making that statement, but I found daughters to be more loving and more caring, and the maturity which they have shown is truly amazing. This is one incident which I'll remember forever. So I come on television, and one day my younger daughter came and said that, Papa, I also want to come on television. So I said, बेटा पढ़ाई बढ़ाई करो बाद में टीवी पे आएंगे. So he said, पापा आप क्या बोलते हो टीवी पे जाके, हमेशा यही कहते हो शॉर्ट टर्म में मार्केट कहाँ जाएगा पता नहीं, लॉन्ग टर्म में इन्वेस्ट करके बैठे रहो. ये तो मैं भी बोल सकती हूँ. ये बोल बोल के आपने आपकी गाड़ी 20 साल चला ली, तो why can't I go and say the same thing? So this is the beauty of innocence. They have been far more loving, caring, and matured than I would have hoped for.
Oh, I have a daughter and I can completely vouch for what you're saying. I also have a son and I again completely vouch for what you're saying. In terms of advice that you've received, I'm sure having a great network of friends, mentors over the years, right? So, what is the single best piece of advice you ever got? And second thing is, what is the single worst piece of advice you ever got, which in hindsight was a bad advice?
When I started my career in investment, that was during articleship days, and promptly I lost all my money. This was the 91 92 period where for a while it was easy to make money. That gave you overconfidence and you lost all the money. And then, you typically go to Dalal Street where those Dagladhari Kaka used to be there. They'll be giving yarn and you can hear them. So it was not a one on one conversation, but it was one to many conversation. And one thing I remembered very, very nicely, in Dalal Street, we do Pujan of Lakshmi Mata once in a year on Diwali night. But here we have to do Pujan of Saraswati Mata every day to make money. I think that was the fantastic advice I got. If I have knowledge and if I have wisdom, I can take on money power in the world. It's not money which will move the market, it is the knowledge and wisdom which will help you make money in the market. So, giving importance to Saraswati as well as Lakshmi is the most critical thing. One advice which, in the hindsight, has not worked. Well, as I mentioned earlier, in my earlier days, I thought having inside information, having market knowledge was very, very critical. What X bhai was buying, what Y bhai was selling was equally important in order to manage money. And there were sets of people who had told me that was you need to be on top of flows in order to figure out what's happening. I think over a period of time I realized that it is important to understand value of information rather than information per se. Many people have information, they don't understand value of it, and they end up losing money. Even if you don't have all the information, as long as you know what is the value of information which you have, you will still do well. There's no need to run after every flow movement. There's no need to run after activity of insiders and non-insiders. Just focus on what you have, understand the value of it, and build it into your portfolio. You will do well.
That's a great advice. I'm sure you had a lot of mentors in the investment industry, the finance world. But are there any thinkers outside of finance that have shaped your approach to investing, decision making, and life in general?
So, as a manager, obviously, I have learned a lot from many people who are not from finance field. But in terms of investment process, investment style, by and large, I will say I have learned from people who are connected to the market. Yes, there is cross fertilization of idea. So, someone who was trading in foreign exchange market, I could discuss with him about equity. Someone who was managing fixed income portfolio and duration, I could still discuss about equity. So there is cross fertilization across market, but by and large, I will say the investment style and process has been perfected over the years by interaction with more market people than non-market people. Non-market people has helped me become a better leader, better CEO, but not necessarily better fund manager.
Since you talked about being a student always and always learning, and you also talked about praying or revering Goddess Saraswati as much as you do Goddess Lakshmi, right? I'm sure you are a voracious reader. You read a lot. So, what are those two or three books that have really helped you in your lifetime? Again, in investing, decision making, or life as well. Maybe two or three top book recommendations for you, for anyone else to read.
So Vishal bhai, I will say that today there is an ocean available. Read whatever is available. Uh, I have found reading Howard Marks' memos equally interesting. I have found reading Warren Buffett's speeches equally interesting. I have also liked uh, books like Sucheta Dalal's Scam 92. I could correlate with those events because I had seen them happening. My limited point is that I have enjoyed reading Pulak Prasad's recent book, What I Learned from Darwin. I enjoy, watching Flames video. My limited thing is that keep your eyes and ears open, learn from wherever it is available, books, podcast, research reports, interaction with people. You have to be a learner, you have to be a student, and keep eyes and ears open, keep on accumulating what you can get.
That's a important advice because, as they say, knowledge comes or wisdom comes from everywhere. So you have to keep your eyes and ears open and be willing to
Absolutely.
soak in that knowledge, right? So, thank you. So here's my closing question to you, Nilesh. Why everyone walks on their own journey of life, and everyone must play their parts well. But what, according to you, is a life well lived?
So if I can put stones in the path of India's financial security, that will be the biggest achievement. As Makran Dave mentioned, गमतू मलिए तो गुंजे ना भरिए गमता नो करिए गुलाल. If I can light one candle which can dispel financial darkness in a small corner of India, that is life well lived.
That's a great advice, Nilesh bhai. So thank you so much for your time, despite your bad throat. And I've had a lot of learnings, immense amount of learnings through this session, this conversation, which is the first conversation which I'm having with you directly after being inspired with you and your work over the last 20 years, ever since I started in the market. So thank you again on behalf of my audience for doing this session with me, and I wish you all the best in your aim to put that pebble so that the Indian investor really prospers over a long period of time. So I wish you the best in your endeavors. Thank you so much.
Thank you, Vishal. Bye.
Thank you, Nilesh. Bhai.